The Facebook IPOs happened, and it really has been kind of a bust for investors. Does this say anything about the state of the market in general, the IPO market, for example?
Well, Matt, I think it's hard to draw a lot of conclusions. Facebook was sort of one of a kind. I mean, it was certainly one of the most high-profile offerings we've seen in a long time. It also traded quite frequently and quite extensively on the private markets beforehand, second market, shares post, those kinds of companies. You know, shares were changing hands, so there was some kind of price discovery on those markets. Also remember, right before the offering, we had a big upsizing of the size of the deal in terms of number of shares sold, and the price was higher, was raised in the last week before the offering. So what you saw was, you saw a deal come to market, and partially because of NASDAQ not being able to open it the way they wanted, partially because the selling shareholders wanted to get the absolute best price they could, including the Facebook insiders. There just wasn't enough demand in the aftermarket to support the stock and give it the traditional pop that you see with these IPOs.
It seems like there's real egg on Morgan Stanley's face, but is there a silver lining in that, you know, perhaps this says that there isn't a tech stock bubble out there because Facebook didn't soar after offering?
On the one hand, it's a good sign that they didn't go out to an absolutely ridiculous, pop on the first day, doubling or something like that, where we would say people were just buying it because they felt like they had to buy it. On the flip side, look at the valuation. We're still looking at a company that trades at 23 times last year's sales at the most recent prices. Compare that with Apple, which goes for 3.7 times last year's sales, or Google, which goes for 5 times last year's sales. And you can see the valuation of Facebook is still pretty extreme. It may grow into that someday, but at these levels, it's hard to say what's going to justify it. We have an earnings report that we'll get in a couple of months. We have a lockup expiring, like you discussed, where the insiders can start to sell their shares, and then the underwriters are going to come out with their analyst reports on this. And as we learned this week from Reuters, Morgan Stanley was already revising their outlook for revenue growth lower during the company's roadshow. So certainly some things out there that could put further pressure on this stock and might keep us in this $30 range around where we're trading right now.
Any predictions as to where Facebook's stock price should settle out and where it might actually be a good buy for investors?
Well, a company like this, where we don't have a lot of public information, sure, we have some earnings reports, we have some details, but we're not going to get anything really new until the first quarter earnings report. It's hard to say where it should go based on valuation from here. What I would say is watch the round numbers, because if you're talking about a stock where people get involved, retail investors are getting involved, and there's a lot of emotion built up into it, if this stock goes below 30, that could trigger the people who are in it now to say, I got to get out, I'm calling it quits on this. If it goes up higher, say it cracks 40, maybe people start to get that feeling once again of, maybe I'm going to miss out on this and it's going to run away from me. This is a point that our contributor, Josh Brown, has brought up. I want to give him credit for it. I think it's a great one, that you have these emotional ranges where you're not going to get value guys in the mid-30s, but you might get them in at, in the low 20s, and you're not going to get the, I'm scared about missing this guys in the mid-30s either, but get above 40, you might see those kind of people come in.